Welcome back to another edition of This Week in 3 Minutes. I call this one the denial shock. Well, here we are going back down again on the U.S. equity markets, Canadian markets. That dead cat bounce was just like it looked, as predictable as ever, running out of steam and starting to trend down again. And it's being compounded by a number of things. But you could look at all of the indexes, Dow, NASDAQ, TSX. They're all, I think this is the fourth day in a row, they've been bleeding red. And like an old woman falling down the stairs, she probably can't believe it until she wakes up after hitting the bottom. Broken hip and knocked out teeth. She'll live. The U.S. dollar is gonna live, but and the markets are going to be fine eventually. But they've got quite a ways to go before they hit the floor at the bottom. So this is the volatility that everyone has been predicting. It has arrived. For all intents and purposes, it looks like it's here. The trade war now has begun with the tariffs on steel and such. We'll see where that goes. Okay, moving into a little more positive news. I saw a chart on silver this week, a big cup and handle pattern that's 4 decades long. It's unlike any silver chart I've ever seen before. And if you don't know what a cup and handle is, go look it up. Look in the show notes. You can see for yourself what that means. And generally, a cup and handle pattern indicates a very strong move to the upside. And since this chart is 4 decades long, who knows how many years silver will be rising. Gold finally above $1,700 in Canadian dollar terms. A lot of analysts forecasting by April, May we're going to see $1,450, $1,500 in U.S. dollar terms. So that's really positive. As for where we are right now in the markets, if you haven't got a strong stomach, well, you better get defensive. And the metals too are going to be moving up and down. For most people will consider that. I see it the other way around. It's dollars that are moving up and down, but. If you can't stomach volatility, if you are so loss averse that the thought of losing any money, well, maybe you should just get out of the markets now entirely. If you haven't got the stomach for it, get out. If you're a little stronger than that, you're gonna need your gold and your silver in the months and years to come, and who knows when this thing's going to get really weird. But I want to share with you a quote from Daniel Kahneman, who is renowned as the father of behavioral economics. The concept of loss aversion is certainly the most significant contribution of psychology to behavioral economics. And what he's referring to when he says loss aversion is the emotional reaction you have to when your savings appear to be going up versus going down. And when they go up, you feel good, and it's a fairly strong feeling. But when they go down, it's a very powerful emotion, and it drives market sentiment. When fear starts to come in, people make irrational decisions because they're fearful. And I think that's what's going to happen, is there's going to be more and more fear driving the markets down, and the news will be down, and people's statements will be down, and advisors will be worried about phone calls and so on, because unfortunately most advisors out there, most investors, they don't have any exposure to precious metals because they don't understand the asset, and it's really not that complicated, but for whatever reason they just don't get it. So if you own metals, good for you. You are part of a select group that are going to come through this just fine. And then the others will be coming to you asking for you to answer the questions as to what's happening. So stay awake, stay aware, stay alert, stay strong. And on that note, have a great weekend. We'll see you next Friday.